months of 2023 and the outlook for the year. My name is Daniel Boesen, and I'm Head of Investor Relations at Novo Nordisk. With me today I have CEO of Novo Nordisk, Lars Fruergaard Jørgensen, Executive Vice President and Head of Commercial Strategy and Corporate Affairs, Camilla Sylvest, Executive Vice President and Head of North America Operations, Doug Langa, Executive Vice President and Head of Development, Martin Holst Lange, and finally, Chief Financial Officer, Carsten Munk Knudsen. All speakers will be available for the Q&A session. Today's announcement and the slide for this call are available on our website, novonordisk.com. Please note that this call is being webcast live and a recording will be made available on our website as well. The call is scheduled to last approximately 1 hour. Please turn to the next slide. The presentation is structured as outlined on slide 2. Please note that all sales and operating profit growth statements will be at constant exchange rate unless otherwise specified. Please turn to the next slide. As always, we need to advise you that this call will contain forward-looking statements. These are subject to risk and uncertainty that could cause actual results to differ materially from expectations. For further information on the risk factors, please see the company announcement for this first 6 months of this year and the slides prepared for this presentation. With that, over to you, Lars, for an update on our strategic aspirations.
Thank you, Daniel. Please turn to the next slide. In the first 6 months of 2023, we delivered 30% sales and 32% operating profit growth, which has enabled us to raise our outlook for the full year. I would like to start this call by going through the performance highlights across our strategic aspirations before handing over the word to my colleagues. Within purpose and sustainability, we continue to make progress across all dimensions. Our carbon emissions decreased by 28% compared to pre-pandemic levels in 2019. In line with our aspiration of being a sustainable employer, we continue to expand the number of women in senior leadership positions. This is now 40% compared to 38% last year. Within R&D, we are encouraged by the many phase 3 readouts with semaglutide in obesity. We are very pleased with the results of the recently completed cardiovascular outcome trial, SELECT. SELECT is the largest trial ever undertaken by Novo Nordisk, and the results establishes semaglutide 2.4 milligram as the only anti-obesity medication with proven cardiovascular benefits. We are committed to drive change in obesity and believe that the SELECT trial with semaglutide 2.4 milligram underlines the importance of recognizing obesity as a serious chronic disease. We believe the benefits of semaglutide on major adverse cardiovascular events in this population will not only be a big difference for patients, but also add value to society. Martin will come back to this and our overall R&D milestones later. The quarter sales growth reflects strong commercial execution across operating units. Both operating units contribute to sales growth driven by increasing demand for our GLP-1 based diabetes and obesity treatments. The performance in the first 6 months has enabled us to raise the outlook for the full year. Camilla and Doug will go through the details per therapy area later. Carsten will go through the financials, but I'm very pleased with the performance for the first 6 months of 2023. With that, I'll give the word to Camilla for an update on execution.
Thank you, Lars, and please turn to the next slide. In the first 6 months of 2023, our total sales increased by 30%. The sales increase was driven by both operating units, with North America operations growing 44% and international operations growing 17%. Our GLP-1 sales increased 50%, driven by North America growing 44% and international operations growing 62%. Insulin sales decreased by 7%, driven by a 2% decline in international operations and by a 25% sales decline in North America operations. The sales decline was driven by declining sales in the US, in region China, and EMEA. Obesity sales grew 157% overall. In international operations, sales grew 66%, driven by both Saxenda and Wegovy. In addition to Denmark and Norway, Wegovy has now also been launched in Germany. In North America operations, obesity care sales grew 207%. Sales of Wegovy increased by 344% in the US, reflecting the performance since the commercial relaunch in January 2023. Total rare disease sales decreased by 18%, driven by a 17% decrease in international operations and by an 18% decrease in North America operations. Rare endocrine disorders sales were impacted by a temporary reduction in manufacturing output. Please turn to the next slide. With 24% sales growth in our diabetes care, we are growing faster than the total diabetes market, improving our global diabetes value market share over the last 12 months to 32.7% from 31%. This is in line with the aspiration of strengthening the diabetes care leadership, aiming at reaching a global value market share of more than 1/3 in 2025. The increase primarily reflects GLP-1 market growth as well as share gains in both operating units. Please turn to the next slide. In international operations, total diabetes care sales increased by 20% in the first 6 months of 2023. This was driven by GLP-1 sales growing 62%. Novo Nordisk is the market leader in international operations with a GLP-1 value market share of 67%. Ozempic continues its GLP-1 market leadership with around 45% market share. We are also pleased to see Rybelsus increasing its market share to just shy of 11%, driven by strong uptake across geographies. With that, I would hand over the word to Doug.
Thank you, Camilla. Please turn to the next slide. The U.S. GLP-1 market volume grew more than 60%, comparing Q2 of 2023 to Q2 of 2022. The volume growth acceleration is driven by a substantial increase in new patients initiating therapy with our portfolio of GLP-1 products, Ozempic and Rybelsus. Measured on total prescriptions, Novo Nordisk continues to be the market leader with a 55% market share. Please go to the next slide. Obesity care sales increased by 157%, mainly driven by the U.S. due to a strong Wegovy uptake and continued demand for Saxenda. The global branded obesity market expansion continues, with a global volume growth of around 76%. In international operations, obesity care sales are driven by a strong Saxenda performance and the Wegovy launches in Denmark and Norway. We anticipate a continuation of the gradual rollout of Wegovy in international operations, which now includes Wegovy launches in Denmark, Norway, and Germany. In the U.S. alone, sales of Wegovy grew by 344%, and we continue to see an overwhelming demand for Wegovy. While supply capacity is gradually being expanded, the supply of the lower dose strengths will remain restricted to safeguard continuity of care. Next slide, please. Our rare disease sales decreased by 18%, driven by rare blood disorder sales decreasing 1% and rare endocrine disorder sales declining 46%. Norditropin sales were impacted by a temporary reduction in manufacturing output. Now, over to Martin for an update on R&D.
Thank you, Doug. Please turn to the next slide. The obesity pandemic affects more than 750 million individuals and is associated with more than 200 possible health complications, including cardiovascular disease, which is the leading cause of death globally. Obesity, therefore, has a profound impact on individual patients and their outcomes, but also a substantial impact on society and healthcare spending. No pharmaceutical weight management intervention has to date demonstrated improvement in patient cardiovascular outcomes. Besides significant weight loss, semaglutide has shown benefits in a wide array of biomarkers associated with cardiovascular risk. This has been seen in the STEP development program. This includes improvements in blood pressure, dyslipidemia, HbA1c, and inflammatory markers. These observations support observations from diabetes, where semaglutide treatment has been demonstrated to be associated with a 26% reduction in risk of experiencing a major adverse cardiovascular event, or MACE. To investigate the potential impact of semaglutide in patients with obesity on reduction in risk of major adverse cardiovascular events, Novo Nordisk in 2018 initiated the SELECT trial. Please turn to the next slide. SELECT was a large-scale outcomes trial and was conducted across 41 countries and more than 800 sites. 17,604 patients were enrolled and randomized in a 1-to-1 ratio to receive once-weekly semaglutide 2.4 milligram or placebo. The eligibility criteria were designed to include a broad population with overweight or obesity and established atherosclerotic cardiovascular disease as defined by prior myocardial infarction, stroke, or peripheral artery disease. Patients with a prior history of diabetes were excluded. The primary objective was to demonstrate superiority of semaglutide 2.4 mg versus placebo on top of standard of care for prevention of the primary endpoint. And this was consisting of as defined by cardiovascular death, non-fatal myocardial infarction, or non-fatal stroke. Key secondary objectives were to compare the effects of semaglutide 2.4 mg to placebo with regards to mortality, cardiovascular risk factors, glucose metabolism, body weight, and renal function. I'm very excited to announce that SELECT achieved its primary endpoint, and once-weekly semaglutide 2.4 mg demonstrated a 20% reduction in major adverse cardiovascular events versus placebo. All components of the primary endpoint contributed to the overall cardiovascular risk reduction. The result from the SELECT trial establishes semaglutide 2.4 mg as the only anti-obesity medication with a proven cardiovascular benefit in a population with overweight or obesity and established cardiovascular disease without prior history of diabetes. We believe that the cardiovascular risk reduction demonstrated with semaglutide 2.4 mg in SELECT hold immense value for patients and caregivers, the scientific community, as well as society at large, and that these results for semaglutide hold the potential to fundamentally change how obesity is regarded and treated. In the trial, semaglutide 2.4 mg appeared to have a safe and well-tolerated profile in line with previous trials investigating semaglutide. We aim to share the full SELECT results at the American Heart Association Congress in 2023 and expect to file for regulatory approval of a label indication expansion for semaglutide 2.4 mg later this year. Please go to the next slide. Building on the potential of broader cardiovascular benefits for semaglutide, Novo Nordisk initiated the STEP-HFpEF trial to investigate the impact of semaglutide treatment on physiological function in patients with obesity and established heart failure. Heart failure with preserved ejection fraction, or HFpEF, affects half of the estimated 65 million patients with heart failure globally. Around 80% of HFpEF patients have overweight or obesity, which is believed to contribute significantly to the disease's pathophysiology. Individuals with obesity-related HFpEF have a high risk of mortality and morbidity and experience the greatest burden of debilitating symptoms and functional impairment. Improving these outcomes is a major goal of management, and very few treatment options are available. In the STEP-HF trial, 529 patients with obesity-related HFpEF and no prior history of diabetes were randomized in a one-to-one manner comparing semaglutide 2.4 mg with placebo when both were added to standard of care. The primary endpoint were the average change from baseline in the Kansas City Cardiomyopathy Clinical Summary Score Questionnaire and body weight. Key secondary endpoints included the 6-minute walking test, a composite hierarchical endpoint including heart outcomes and high sensitivity C-reactive protein. In the trial, semaglutide showed a 16.6 points improvement versus 8.7 points in the placebo arm at week 52. The mean change was thus 7.8 points in favor of semaglutide, which is considered a clinically relevant and very strong result within chronic heart failure. I would like to also touch upon the headline results from Oasis 1. So please turn to the next slide, please. Oasis 1 was a phase 3b trial with once daily oral semaglutide 50 mg. The trial design details are on the slide. Overall, patients who received oral semaglutide 50 mg achieved a statistically significant weight loss of 17.4% after 68 weeks of treatment, compared to 1.8% with placebo. The results are comparable with the weight loss demonstrated in STEP 1 with injectable semaglutide 2.4 mg, and will give patients and caregivers an opportunity for individualized treatment. Please go to the next slide. In line with our business development strategy in obesity, focused on either technology platforms or early to mid-stage assets, we are pleased to announce the acquisition on Inversago Pharma. Inversago is focused on the development of a cannabinoid receptor 1 inverse agonist, which is designed to help people living with obesity, diabetes, and complications associated with metabolic disorders. The acquisition includes the lead asset, INV-202, an oral cannabinoid receptor 1 inverse agonist designed to preferentially block cannabinoid receptors in peripheral tissues only. INV-202 demonstrated promising results in terms of weight loss in a phase 1b trial and is currently in clinical development for diabetic kidney disease. Next slide, please. Turning to R&D milestones, I would like to highlight some of the other exciting events, trial readouts, and initiations across our therapy areas in 2023. Within diabetes, we anticipate the submission of oral semaglutide 25 and 50 mg in US and Europe during the second half of 2023, and further to initiate a phase 2 trial with the GLP-1 GIP co-agonist in the fourth quarter. Within obesity, we completed a phase 2 proof of concept trial with PYY in May. Due to a modest treatment effect, we have decided to terminate the development of this PYY agonist. On a separate note, we are anticipating the results from the ongoing phase 1 trial with oral amycretin during the fourth quarter. In rare disease, Sogroya was approved in Japan and in Europe for the treatment of children with growth hormone deficiency. In other serious chronic diseases, we initiated HERMES, a phase 3 heart failure cardiovascular outcomes trial investigating ziltivekimab in patients with heart failure with preserved ejection fraction. The current treatment options for these populations are very limited, and this makes one of the greatest unmet needs in cardiology today. With that, over to you, Karl.
Thank you, Martin. Please turn to the next slide. In the first 6 months of 2023, our sales grew by 29% in Danish kroner and 30% at constant exchange rates, driven by both our operating units. The gross margin increased by 85.1% compared to 84.4% in 2022. The increase is driven by a positive product mix reflecting increased sales of GLP-1 based treatments and a positive currency impact. This is partially countered by costs related to the ongoing capacity expansions, as well as lower realized prices, mainly in the US and region China. Sales and distribution costs increased by 27% in Danish kroner and by 28% at constant exchange rates. The increase is driven by both operating units. In North America operations, the cost increase is driven by the relaunch of Wegovy and promotional activities for Ozempic, while in international operations, the cost increase is driven by promotional activities for Rybelsus, as well as obesity care market development activities. The increase in sales and distribution costs are impacted by adjustments to legal provisions. Research and development costs increased by 34% in both Danish kroner and at constant exchange rates. The increase is driven by higher late-stage clinical trial activity and increased early research activities compared to the first 6 months of 2022. The acquisition of Forma Therapeutics in 2022 also impacted costs. Administration costs increased by 9% measured in Danish kroner and by 10% at constant exchange rates. Operating profit increased by 30% measured in Danish kroner and by 32% at constant exchange rates, reflecting the sales growth. Net financial items showed a net gain of 96 million Danish kroner compared to a net loss of around 2.8 billion Danish kroner. The effective tax rate was 19.9% in the first 6 months of 2023 compared to 20.7% in the first 6 months of 2022. Net profit increased by 43% and diluted earnings per share increased by 44% to 17 kroner and 41 Danish øre. Free cash flow was 45.5 billion Danish kroner compared to 42 billion in 2022, supporting the strategic aspiration to deliver attractive capital allocation to shareholders. The cash conversion is positively impacted by timing of payment of rebates in the US. This includes provisions related to the revised 340B distribution policy in the US. Note that income under the 340B program has been partially recognized. Capital expenditure for property, plant, and equipment was 10.6 billion Danish kroner compared to 4 billion Danish kroner in 2022. This primarily reflects investments in additional capacity for active pharmaceutical ingredient production and fill finish capacity for both current and future injectable and oral products. Please go to the next slide. A key priority for Novo Nordisk is to ensure attractive allocation of capital to shareholders. For 2022, the dividend per share increased 19.2% to 12.40 kroner. For 2023, the board of directors has decided to pay out an interim dividend of 6 kroner per share, which will be paid out in August this year. In line with our strategy, we have returned more than 32 billion Danish kroner to shareholders in the first half during dividends and ongoing share repurchase program, which is up to 30 billion Danish kroner for the full year. To secure liquidity for both the Novo Nordisk B shares and American depository receipts, the board of directors has decided to split the share in a 2-for-1 ratio in September 2023. Please go to the next slide. Midway through 2023, we're continuing our sales growth momentum, which has enabled us to raise the outlook for the full year. We now expect the sales growth to be between 27 and 33% growth at constant exchange rates. This is based on a number of assumptions as described in the company announcement. The guidance reflects expectations for sales growth in both North America operations and international operations, mainly driven by volume growth of GLP-1 based treatments for diabetes and obesity care, partially countered by declining sales in rare disease due to a temporary reduction in manufacturing output. The guidance reflects the level of volume growth of GLP-1 based diabetes treatment and the inherent uncertainty of the pace of the obesity care market expansion. Following the relaunch of Wegovy in the US and a limited rollout in international operations, the outlook also reflects expected continued periodic supply constraints and related drug shortage notifications across a number of products and geographies. As mentioned by Doug, the supply of the lower Wegovy dose strengths in the US will remain restricted to safeguard continuity of care while supply capacity is gradually being expanded. We expect that operating profit growth will be between 31 and 37% at constant exchange rates. This primarily reflects the sales growth outlook and continued investments in current and future growth drivers within R&D and commercial. For 2023, we expect net financial items to amount to a gain of around 2.8 billion Danish kroner, mainly reflecting hedging gains associated with the foreign exchange hedging contracts. Capital expenditure is still expected to be around 25 billion Danish kroner, reflecting investments in additional capacity for active pharmaceutical ingredients and fill finish capacity for both current and future injectable and oral products. The free cash flow is now expected to be between 64 and 72 billion Danish kroner, reflecting the sales growth, a favorable impact from rebates in the US, and investments in capital expenditure. The updated cash flow expectation is reflecting business development activities. This covers the outlook for 2023. Now back to you, Lars, for final remarks.
Thank you, Carsten. Please turn to the final slides. We are very satisfied with the sales growth in the first 6 months of 2023. The growth is driven by increasing demand for GLP-1 based diabetes and obesity treatments, and we're serving more patients than ever before. The performance in the first 6 months has enabled us to raise the outlook for the full year. Within R&D, we are very excited about the results from the SELECT trial. Obesity is a serious chronic disease associated with many comorbidities, and the results from SELECT demonstrate that comorbidities associated with the condition can be significantly reduced by treating people with semaglutide 2.4 milligram.